Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great trading day yesterday as we saw one of those days where the market decided to say, hey, I don't really want to follow the trend. I'm going to switch around and change directions. Now, when we have days like that, we're going to take stop outs as trend following traders. And so we're going to review some of those today, knowing that it's all right if you took a few licks yesterday. Now, we did have a couple of updates for those of you that are Traders Army members that came out, that really changed a little bit of what we did throughout the day. So let me just share those with you real quick. So one of the things that we do, by 9 o'clock Central yesterday, we realized that the S&P, the Russell, they just weren't really moving, so we moved our stop to around break even. The NASDAQ reversal was invalid due to basing in front of the level. So we knew that it was already a day where we were going to see some weakness. But one of the things that we talked about yesterday was that we were looking at additional long, strong equity stocks. Like, for example, we added a Roku trade to our trade worksheet. For those of you unfamiliar, our trade worksheet is we put trades out that go to the members that you guys. There's a short video on each one of those trades with the entry, the stop, and the target. So my point behind that all being is that we said, the big picture of the market, if we look at the big picture as my 4-hour, for day traders, my big picture was telling me, hey, you should probably look to be a seller. If you were a swing trader, more of a longer term swing trader style, you had a decent level of demand right in here, right? Decent level of demand right in here on the daily time period. And that's why it's important to have, what we call portfolio management, right? Where we're looking at not just the day trading opportunities, but also the opportunities afforded for longer term positions. This is the picture I think we tweeted out a couple of days ago, just of that daily demand and where it looked like it was going to be inside of that S&P 500 as price was coming back down into that area. So when we look at this from a longer term perspective, those are some of the things that we kind of identified. So if you added some stock positions to your portfolio, hopefully you were able to pick a few trades up to the upside. Now, all that with on the caveat, knowing that we are going to take a fair amount of stop outs on the smaller time frame stuff. So let's go ahead and dive through those. By the way, if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen whenever those come into play. So the S&P, we had a gap fill level that we just blew right through that, cut through that like a knife through butter on our gap fill level. We then came to our Thursday morning opening position and got a little bit of a reversal out of here. 1, 2, 3, 4, 5, 6 candles later, the market had told us to move our stop to break even, and it hasn't really done much since then. So now looking at my 4-hour chart, my 4-hour has not really changed big picture trend direction. I have a higher swing high, as this is indicated right here. I don't yet have a higher swing low. So if we get a bit of a pullback, I can look to an opportunity to buy today. I can also look for basing in front of this level here for a potential breakout to the upside. Now, normally I would go to this red candle right here. This red candle right here would make a pretty nice little level right at our gap fill area. But if you see this green candlestick right there was an immediate retest area, and those immediate retest areas are going to be the ones that give us sometimes the best first trade, but they don't always give us a good chance to get back in. So I don't have super quality demand levels below me. As I look at current price and I look to the hourly demand below me, just explain why I don't see any. So I'd have to come to each move higher. This move right here has already been tested right there. Below that, theoretically, I could come to this level right here, although it's probably not the best. Time of day is not great on there, so I would come here. This has already been retested, so I could come all the way down to this little wick over wick area in here, right at yesterday's market open, where we had come back up after our little breakdown from Sunday night. So I think your better play is just to wait for the potential breakout. Same picture in the NASDAQ. Identical picture in the NASDAQ as we blew through those other areas. We hit that the gap and go, or we hit the 6 candle rule up here. The gap and go actually was never in play in the in the NASDAQ, but we did have basing before. Yesterday we looked at this supply level, but the basing right here before the level kind of invalidated that zone and that trade. So now what we're looking at is, do we get basing above here, right in this zone? In the NASDAQ, I do have a little bit of a better demand area below us down here in yesterday's afternoon time of day. If I move to a 15-minute chart, it's actually a little bit cleaner area to see right here, right in this area there, as well as this one in here. So the NASDAQ does give me a bit cleaner of a reversal trade. I will at least put that one in play, although I do like the breakout a bit better. Next would be the Russell. Same picture in the Russell as the other two markets. As price, once again, we'd hit on our hourly chart. If we took this, we had this breakdown here. 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So moving that stop to the break-even point. Now we did come back up to the reversal area here. Did get a little bit of a move away on this confirmation short for about a 1-to-1, maybe even a 2-to-1 reward to risk. So that one actually did give you a little bit of a move. We do have some supply above us still here on the hourly chart that we've not yet approached, and we're still a bit below there. If we get basing in front of the level, then this level up here would be null and void, and we could have a breakout candidate on our hands, or we could base inside of that area and continue to get the breakout. So when I look at this, if we get a bit of a pullback, if I go to a 15-minute chart and we get a bit of a pullback, here's that same not great time of day area that's shown up in the other two markets as well as this area down here, which is really a clean one to look at. Now, that's a bit of a pullback fairly far away, but worth identifying and looking at for sure. Next, let's move over to crude oil. For those of you that are trading crude, we came to the gap fill area in the crude market as well. And very similar picture to what we have in our other markets, as we just saw everything shift trends. And when we shift trends, it's one of those things where we had a great week following the trend the week prior, and then as we shift trends, we take a little bit of a small stop out. So we do have another level that we're approaching right up in here. We've gotten one touch. We're starting to get a little bit of a move away. Now, unfortunately, we had this basing right here, right? So all of this basing right here means that my risk is this much, because my stop has to go above this closest wick, and my reward is that much. So essentially, I have a little bit greater than a 1-to-1 reward to risk with this supply zone in here, making it a little bit tougher of a zone. I'm going to keep a line up here because I think we could still get basing and a breakout to the upside from that area. If we get the basing, then I think it might work out pretty well with price moving up from here and from this region. Gold, we are in our same kind of sideways price action we've been talking about, iron condors and gold. We did come to a potential little supply area, and that was actually on a 15-minute chart. I just didn't change the color yesterday. We did come to a potential little area, but then just didn't do anything with there, chopped around sideways inside of it before then causing a breakout trade to go to the upside. But we're still in between our major areas of supply and demand, so those of you that trade the iron condors are probably still doing okay in your gold position, so hopefully those are still going well for you. Moving over to bonds and currency markets. And in our ZN, we had this double top area that we spoke about a little bit yesterday, showing some weakness, allowed us to see that on our 4-hour, we put in a lower swing high, lower swing low. So that 15-minute level then says, hey, we need to either be a confirmation trade or cancel the trade due to this basing here in front of the level. So no real reason for entry on that position during the Globex session. Now looking at this, let's take a look at this line right in here to see if we get basing right before here for a bit of a breakdown. The Aussie, we had two Aussie supply levels. The first supply level was the gap fill area. We came to the gap fill, and just like every other gap fill, I mean, I can't stress this enough, every gap fill from Sunday night got blown right through. Now, it did get to our next supply level, and we've gotten about a 4-to-1 move out of this supply area in the overnight for those of you that took that level. Now, we traded all the way to the top, so I need to remove that zone. And so looking at yesterday's areas, this does give me a pretty good potential reversal level right here. There's a small wick over wick just above that could actually also, we may not make it to this lower level. So if you're more aggressive and want to try this wick over wick area, that level is still available as well. Now, by the way, I'm going to put all four of my markets up here again so you can kind of see them. The euro, the Aussie, and the Canadian dollar look nearly identical. I mean, just looking at them right in here, there we go. Let's put them one over top of each other. I mean, even to this wick over this wick, this lower low, moved up, come down off of this level. So we're seeing that same picture in all of these markets. We hit this hourly level. We've gotten a decent little move away. We've now got another level here up above. So if price comes back up into that region, you've got another short area up in here. But we have gotten a nice move away from this hourly level, on this position. As far as taking the breakout trade, you did get a bit of basing, but 1, 2, 3, 4, 5, 6 candles later, price had gone nowhere. So ultimately, we're seeing, these things may continue down. Currencies have a better chance of continuing down, as we're seeing, those continue to move. In our euro, we did come into our euro supply level, moved away for a couple of candlesticks, a nice 1-to-1 move away before then reversing and heading back north on here. So we're into this wiki supply area up in here. For now, I'm not going to add any levels to the chart because I don't have anything super clean. The closest thing I have to clean would be similar to what we just saw in the Aussie, this demand area here. Keep in mind of this wick over wick that's right up in here where we could see a reversal as well. Great British Pound and Japanese Yen. Looking at our pound and yen levels, the Great British Pound, we did hit our hourly reversal, and just like every other market, hit it, chopped in it a little bit, popped through, and then hit the secondary supply level up above. And got a little bit of a move away. So, and that's oftentimes what I'll see happening, right? If we see that there's multiple areas of supply, the first one will break, but the second one will hold. And that's what we've seen in all of our currency markets. Now, need to remove that level since we've traded into it. And as I look a bit higher, we do have a decent area up here. It's not a great time of day. Levels not formed at a phenomenal time of day. These are actually usually pretty terrible times of day. But we may see a bit of a reversal off of that zone. And then the Japanese yen, we have this area right here, which is a pretty good little spot, but we're basing in front of it. So be close to that area could actually serve for a better breakdown. So look for basing in here for price to break down. So, how do I put this the right way? Mama told me there'd be days like this. And so if you guys got a few stop outs yesterday, don't allow yourself to feel overly frustrated because you just got to wait for the next trades, and the next trades that come along will be the ones that set you up for your best successes. So if you guys have a great day, shoot me an email, support@tradersarmy.com. We're here to help you, anything we can do. Until tomorrow, everybody, I'll talk to you soon. See ya.